Right, today I want to talk about this particular Trump tariff. So has the April 2nd tariff bombshell been priced into the market, right? So since hitting a high in February, right, 2025, the S&P 500 has dropped 10.43%. Social media is now flooded with pessimistic forecast, especially as many individual stocks have plunged between 22 and 40%. Now, this decline here began when Trump's new tariff proposals rattled the market, starting with Canada, Mexico, China, then extending to Europe and other regions. So by April the 2nd, we would actually know, all the other regions, how is it going to be. So with the full details of the US tariff plan set to be revealed on April 2nd, 2025, the key question right now is, has the market already priced in these threats as it often does, or is there a deeper correction underway that could lead to a recession? So from a technical standpoint, the market is not in a bear territory. A bear market is commonly defined as a decline over 20% and is often associated with a recession, right? So far, the S&P's fall of 10.43% fits within the typical range of market corrections, which tends to hover between 10 to 15%. Okay, so only when it hits that 20, then I'll be thinking, but then we can't just say that is, we have to back this up with other data as well. For example, we have the smooth US relation probabilities here. So if we consider this smooth US recession probabilities indicator, which has historically signaled recessions when it surpassed 10%, the current reading of 0.26%, as you can see from here, suggests no immediate cause for alarm at the current moment, right? So what is it really happening here? Because there are other reasons, why people are like investors and traders are calling, saying that a recession might happen. If you look at YouTube, they are just saying that the US market it's going down the dumps, and it's crashing, and oh my God. I mean, you get a lot of this negative news, and you understand what I mean. Well, so one of the things that created these particular discussions about recession is that we had a GDP data that showed a negative growth, but I call this a distorted GDP data. Why do I call that? Let's have a closer look. Now, concerns have surfaced over potential economic contractions in Q1 2025 based on recent GDP data, right? However, if you dive in, a more detailed analysis suggests that numbers may be misleading due to an unusual spike in non-monetary gold imports, i.e. gold acquired for industrial, commercial, and investment purposes, not for use by central banks. Okay, so this is not bought by central banks. Okay, that is the thing. That's why we call it non-monetary gold imports. So in January 2025, the US trade deficit widened significantly, reaching a record of 131.4 billion. A large portion of this was due to a surge in gold imports as businesses rushed to stockpile in anticipation of upcoming tariffs. Now, these imports do not directly reflect economic activity in terms of production or consumption. The Atlanta's Fed's GDP Now model initially projected a 2.8% contraction for Q1 2025, but these estimates was skewed by the inclusion of these gold imports. So after adjusting for the anomaly, the revised projection shows modest growth of 0.4% for the quarter instead of a negative quarter, right? So right here, why gold imports distort the GDP? Now, gold imports are often held as investment assets and rarely enter the economy as part of day-to-day production or consumption. When these are excluded from GDP calculations, the data reveals a more accurate and stable economic picture, right? So basically, just to let you all know, imports and exports play a role in the GDP calculation. So when you have more imports than exports, and that's not a good thing and will affect the GDP negatively, and that's just what has happened, right? So many economists have noted while the headline trade numbers may suggest weakness, the underlying fundamentals are stronger than they appear. For example, Goldman Sachs recently updated its Q1 2025 GDP growth forecast to 1.6%, taking into account the distortion caused by gold imports. So, the million-dollar question, how much lower could the market go? Now, since a recession isn't looming, we have seen that the GDP, that one probably can recover. We've seen the US move recession is at 0.26. So that's still a high possibility that a recession will not come in the short term. So how much further can the market actually drop? During the last trade war under President Trump, during his first term, right, the market dropped by about 12%. Okay. With the average maximum correction hovering around 50%, we may be approaching the lower limits of this current decline, right? So now, how am I basing this upon? This is just an assumption based on historical data. We already have a 10% drop, right, in the market. So right now, we still have about 2% to go, 2 to 5%. So from 12 to 15, so 2 to 5%. So how would that be reflected in the market? So let's look at the chart here. Now, here is the 10%, and if that 10% means that that's the bottom, yeah, the market could rise from here, depicted in the blue line. But if the S&P drops by another 2%, that will be about 5386.71 before it recovers. While a 5% drop, extra 5% drop would bring it around 5201.81. Okay, so this particular 2% drop will take out this liquidity, which is a good thing. And this 5% drop would be a round number as well. And if the market has dropped enough, this whole blue box that I just drew here is a support on its own, which means the S&P can actually move up from here, S&P 500. So now looking into this, we need a catalyst, something to push the market up, right? The market can't simply just move up and make all-time highs again. It needs to be a catalyst. So what could trigger a rebound? Now, looking at the market, studying all the geopolitical issues that we are seeing right now, a potential resolution to the Russia-Ukraine conflict, possibly brokered by Trump, could serve as the emotional and political catalyst for a market recovery. Now, we have this morning, we have seen the US announcing that, they probably expect a ceasefire, a total ceasefire to be called by Easter, somewhere about around near mid-April. Though the Russians, they have said, no, not that fast, there's still more discussions to go. That since everybody is now sitting down on the negotiation table, there is this high possibility this could actually happen, and that could be the catalyst that actually push markets higher. So we'll see. Until then, this is the report for today.